2026 is setting up to be just as eventful with elections, policy shifts, global trade dynamics all in play. Boris, as we head into the new year, what are the biggest macro themes traders should be preparing for?
Well, first and foremost, this is the year of elections, right? And I think too many people have been drawing too many inferences, too many conclusions from the very, very small sample of elections that we've had so far. But having said this, if you look at the early set of elections in what's called the off year in the United States of America, it's been a massive swing back towards the Democrats. The Democrats not only won in almost every single place where they ran, but they won big. For example, the contests in Virginia, the contests in New Jersey were forecast to be very tight, and they were double-digit blowouts, which in American politics is just huge. And that may be a sign that the populace is just feeling this enormous amount of pressure from the inflationary forces. That the people are just not feeling good about the economy. They primarily voted for Trump to kind of cut prices and make the cost of living lower. Of course, to be honest with you, no politician can do that, and certainly no politician can do that in 12 months. But it doesn't matter. The politicians always get blamed. So there is, I think, I think conventional wisdom in this case is accurate in the sense that the populace is frustrated. But I think it's also completely, what I would say, completely overcalculated into its idea that the Congress could turn Democrat overnight. The reason why I say this is because this was an off-year election, and remember that most Republican voters just are very low kind of engagement voters, and so they really didn't they don't come out in off-year elections. Secondly, when you look at personal income growth, personal income has actually been growing pretty well, and the question is just how much discontent there is in the whole country versus the very, very progressive areas where all of these elections took place is very hard to say. The one thing we know for a fact is that the American populace has become radically polarized. I mean, to a point where you could make the very legitimate argument that a huge swath of the American population lives in completely two separate realities that don't have anything to do with reality. And that's why it's very hard to try to forecast where the elections go. But if they do go, if they do go in two separate scenarios, I think it's important to understand what that means. If the Republicans hold on to Congress, which at this point seems to be a pretty thin possibility, but if they do, let's say there's a big rally, that really entrenches the pro-growth, pro-business agenda, greater deregulatory powers. Because remember, in the last 2 years of their terms, the presidents, when they control both houses, really try to stuff as much of their legislation as possible, into the record, and that could, of course, behoove well for financial assets and stocks if there's more growth and deregulation. If, on the other hand, we have a big blue wave, and we have a stalemate where the House is Democrat, the Senate stays Republican, and the presidency stays Republican. The old conventional wisdom was that this was good for the country because it kind of completely stalled any kind of partisan politics. But I think the new conventional wisdom should be that it's very bad for the country because it only actually exacerbates partisan politics. Remember, we're now at a stage now where both parties truly see each other as the enemy, not as a collaborative opponent. And I'm afraid that we could get completely off track where political rancor takes over versus what's necessary as far as policy goes, and that could hurt the economy. So the conventional wisdom of it's going to be a mixed house. That means the government is really not going to be able to interfere in the economic development of the country. Maybe the exact opposite. It will interfere in the worst possible ways. So huge overregulation from the progressive front, lots of reactionary responses from the president, from an executive order point of view, and just generally I think, a very negative political situation. So we have to see. Let's hope I'm wrong on all of this. But that is a definite big risk. And that risk, by the way, creates the kind of toxic conditions and a tipping point for some sort of geopolitical risk, which we may talk about going further, which in turn, of course, can create very, very significant market risk. So we need to be mindful of that. I don't think that a mixed house is a really positive scenario for 2026. Now, the other election that just happened that has had a big, big impact, of course, is the Japanese election. And we had, first of all, the first prime minister of Japan that is a female, Ms. Takaichi, who is sort of a very interesting character. She is both a heavy metal fan and an incredibly right-wing reactionary politician who you could make very, very credible argument is essentially Japanese version of Donald Trump. She believes in big stimulus spending. She believes in strong national identity. She believes in sort of Japan first tactics. All of these things, I think, are having a very, very interesting impact on the Japanese psyche and the Japanese economy. The first thing that's happening in the Japanese economy is that the yen has gotten weaker. She likes a weaker yen, just like Donald Trump. She wants yen weak again. I remember yen has had a huge weakening move back up to 150. It's strengthened a little bit since then, but it's not inconceivable that she may want to push it back up into record territories. And that's going to be very interesting to see what the impact of that will be, not just on the Japanese economy, but on global capital flows, right? One of the arguments that the Uber bears have been making recently is that, listen, for the last 20, 30 years, the whole West has been coasting off free Japanese money. And how did that work? Well, because Japanese rates were essentially zero for decades and decades and decades. All the Japanese savings went into the outside world. They went into U.S. stocks, primarily U.S. treasuries. That created this huge demand for U.S. financial assets that may not have been there. Now, for the first time, we have serious yield in the Japanese market. Japanese 10-year bonds are at record highs. That means Japanese insurance companies, pension plans, all can keep their money at home. And of course, all investors prefer to keep their money at home, first and foremost, because it's far less expensive because of no FX, no currency risk and no currency transactional costs. So if the Japanese keep their capital at home, that means the rest of the world may be starved for Japanese capital, and that will be that could be one of those big risks that sort of the Uber bears are warning us about. Hasn't really had an impact right now, but doesn't mean it won't. And we should be sort of very, very mindful of this in 2026 as a potential sticking point and a potential problem for the capital markets. Because if it's one of those waterfall effects, if the Japanese decide to pull even a little bit of money from global capital markets, that could trigger a much greater liquidation than we expect for no reason at all. It doesn't even have to be bad economic performance. But suddenly you have this run on assets in the financial markets, and those panics, of course, can be self-fulfilling prophecies. So need to be mindful of that. I think as a legitimate, not necessarily a huge risk going forward.
USD JPY is currently at 157. Yeah. Maybe we'll have to pull up that chart later.
Yeah, we'll take a look at those charts.
Close to all-time highs. I think the all-time high was back in June 24 at 161.
Right.
USD JPY.
Correct. It is one of those not impossible scenarios that under the new government, we might, we could certainly see record highs, but we could see 180. I mean, I remember, correct me if I'm wrong, but I think there wasn't in the 70s before or the 80s before the Plaza Accord agreement. I think the yen was trading in the 200s at one point. So it's not that it's never been there. It's just it hasn't been there in modern era, and that could be a very, very interesting story if it gets up there for all sorts of reasons, not just for the Japanese themselves, but what that means for the rest of the world, because Japan is, of course, a major supplier of capital to the rest of the world. The final story of 2025 kind of developing now is the tariff truce, right? That we sort of the worst of the tariff wars seem to be behind us. President Trump, I think, not only wanted to create a more positive posture on tariffs, but he's really looking to realign the whole global trade model into much more of a national model of trade. And I think you could say he's certainly made a lot of stress and impact in that area. The key question is, how will things stabilize? Just like Bitcoin, globalization, people have tried to kill globalization over and over and over again. And just like Bitcoin or the Terminator, it just keeps coming back. And I think part of it is because much as we hate it, and much as many of us may lament the fact that there's all sorts of negative fallouts due to globalization, it's simply the best way to organize global societies, not necessarily maybe individual societies, global societies, in the sense that as the more open trade we have with each other, first of all, that creates far less political tension, because countries that trade together usually don't fight against each other. But more importantly, it just creates the natural dynamics of free market economic, that you get the least expensive goods to the most amount of people. Of course, the negative aspect of it is that the people who were once super rich now feel super poor because the rest of the world is catching up to them. And that's sort of been the story of globalization. There's just these incredible political pushbacks on globalization that we're seeing now. But I think ultimately that's really sort of the story of the tariff truce, is like, despite everything that everybody does and all of the realignment, it's really, I think, kind of cosmetic changes at the edges that happens. The bottom line is the world communicates instantly and it wants to trade instantly. And I think globalization itself as a concept is just not going to be killed off, even though we've tried really, really hard over the last couple of years.